Good morning, welcome back to WellPod X. Bitcoin had a dramatic weekend, swinging between the high of 105,000 before dropping back below six figures. It briefly dipped under 100k before recovering to 102,000 this morning. The volatility over the last 48 hours was largely driven by a wave of liquidation, with traders who had leveraged long position getting wiped out when Bitcoin failed to hold its high. The key level to watch now is whether Bitcoin can sustain a close above 100k for multiple days. If it does, we could see another test of 105,000 and possibly higher. There are also the question of whether this weekend shakes out was a healthy reset. Could it be a classic stop hunt before the next leg up? Or is it a warning that Bitcoin isn't quite ready to break higher yet? Looking at the bigger picture, Bitcoin is still in strong position overall. Corrections are normal, and even if Bitcoin drops further in short term, it doesn't change the macro bull case. Today, let's look at the story of a man who bet everything on NVIDIA and lost it all. When I first came across this story, I thought it had to be clickbait. A guy bet his entire portfolio on NVIDIA, a stock that has since exploded over 2,000%. Yet somehow he still loses everything? It sounded impossible. But the reality is not only impossible, it's a textbook example of how greed, leverage, and poor risk management can destroy even the best investment decisions. Back in 2018, the UK investor saw the writing on the wall. He understood that AI was going to be massive and NVIDIA was going to be a major player, and buying early could lead to massive gains. So he put everything he had, £100,000, into buying NVIDIA. And he was absolutely right. If he had simply bought NVIDIA shares and held on, the 100k would now be worth over £2.2 million. But he didn't just invest, he leveraged his position. Take out margin loan to multiply his exposure. He wanted to maximize his return, thinking that he was being smart by using borrowed money to amplify his gains. But then we all know COVID-19 hit. The entire stock market crashed. NVIDIA, like everything else, took a sharp dive. Because he was leveraged, he didn't have the ability to ride out the storm. Instead of holding through the volatility, he was hit with margin calls. Forced liquidation that wiped out his position completely. By the time NVIDIA started recovering, he was already out of the game. And the tragic part is he was absolutely right about NVIDIA. He saw what most people didn't. But he didn't manage risk properly. He lost everything instead of walking away with life-changing profits. And today he still works an ordinary job, and he couldn't really fully recover from this experience. This story perfectly illustrates a few key lessons. Being right about the market isn't enough if you can't stay in the game. Even the best investment means nothing if you don't have the ability to hold through volatilities. Leverage is a double-edged sword. It can amplify gains, but it can also wipe you out in an instant. Most people underestimate how quickly things can go wrong. And the last one, building wealth, is a marathon, not a sprint. If this investor had simply taken out a slow and steady approach, he'd be a millionaire today. Instead, he got wiped out trying to get there faster. It's easy to think it wouldn't happen to me, but how many of us take on unnecessary risks, chasing short-term gains, or ignore the importance of diversification? This story is harsh, but necessary reminder. Protect your capital, play the long game, and don't let greed ruin a winning trade. Now let's take a look at today's top 3 crypto news. The latest crypto craze is centered around Melania Trump's meme coin, which has skyrocketed to absurd 4 billion market cap practically overnight. While we've seen celebrity-linked meme token before, very few reach this level of hype. And now we wonder how long can it last. If we've learned anything from the past meme coin manias, is that they follow a predictable cycle. Hype, parabolic rise, FOMO buying, and then the brutal collapse. While some trader will make some insane gains, many will end up holding the bag while the inevitable crash comes. Meanwhile, Donald Trump's own meme coin is also making headlines. The Trump token, which launched a little earlier, has been experiencing wild volatility, with its price surging and dropping as speculation around Trump's campaign and crypto stance growth. With both Trump and Melania now having their own meme coin, the crypto market is getting crazier by the day. The second news, Michael Saylor is doubling down again on his Bitcoin convictions, hinting at Bitcoin for the 11th consecutive week. MicroStrategy now holds a staggering amount of Bitcoin, reinforcing its position as the largest public traded company with Bitcoin on its balance sheet. The relentless accumulation signals strong institutional beliefs in Bitcoin's long-term value. It's worth paying attention to how these big players are moving. While retail investors often get caught up in short-term price swings, Saylor's approach is simple. Just buy and hold, no matter what the market is doing. Now the third news. This weekend's price drop below 100k wasn't just a casual dip. It led to a massive $1 billion in liquidation across the crypto market. Many leveraged traders were caught off guard as Bitcoin dipped, triggering a wave of forced selling. This is a reminder how dangerous leverage can be, especially in a high volatility market like crypto. Every bull market sees traders get greedy, over-leverage, and then wiped out in a sudden correction. If you're trading, managing risk is crucial. Otherwise, you could end up as just another liquidation statistic. Well, that's a wrap for today's episode. If you found this video helpful, please like and subscribe. Stay invested, and I'll see you tomorrow.